Good morning. Watch that tweet very, very closely. That's making all indices, the Wall Street indices, the Asian indices, and hopefully even the Indian indices move up today. Trump saying that the talks with China are going on very well. This comes after Commerce Secretary Wilbur Ross said much the same thing, that talks with China are progressing well, and that's led to a fairly decent rally in Asian indices, and that was preceded by a rally in Wall Street indices. Good morning and welcome to Bazaar Morning Call. It's a full house here, Anuj and Surabhi with me, and a fairly green Asian screen, you'll have to say. Perhaps the negative for India will be that when you have positive growth cues, you also see crude moving up, and that would make us a little bit of an underperformer. In the past, the Sensex and the Nifty have oftentimes risen along with crude, but it would just make us a little bit of an underperformer, considering that we are also sitting on a three-day rally. So Indian bulls are sitting on a decent amount of gains. You have a crude rally, which makes us a little bit of an underperformer, even if we are in the green. And a third factor, there is a bit of negativity that could hit the bond markets because of large election promises. And that could also make for an Indian underperformance, not necessarily red, but a bit of Indian underperformance. At the moment, of course, the SGX Nifty is indicating a green start. Morning, both of you.
Good morning, Lata. Good morning, Anuj, and welcome back to you as well. The good news for global markets, I guess, is that Donald Trump is a die-hard bull, right? So come what may, I mean, he ends up sort of saying things that at times at least please the market. Let's see if that continues. There's a sort of a smart rally underway across Asia this morning. Most of the markets at the highest point of the day. The SGX Nifty is up and about as well. The only additional negative, if I were to be a party pooper, Lata, that I'll add is yesterday's number on the domestic institutional side, the mutual fund number. A 21% drop month on month. It's a 30% low number. I mean, pure equity flows at just 5,000 crore rupees. Now, the industry has been maintaining throughout. Most people that I speak to on the face of it, that it's because of market volatility. December was a wobbly month for the market,
etc. The only reason why it may not be a party pooper today is that yesterday it came at 12 o'clock.
Yeah, absolutely factored in. But I'm just saying in terms of the talk points, but we have to see if this is really how it plays out, if it is indeed an aberration, as the industry keeps claiming. But anyway, Anuj, to you, I was just counting the bars. I mean, 12 trading sessions stuck in this range, not able to take out 10,900. The way we are set up today, how do you read the charts?
Morning, Surabhi. Look, I'm not a chartist, but I'll just tell you a few things. Is that, if you respect the basic risk reward of this market, the last 15 days has been the most profitable period for the market. Remember, we went to 10,900, 950, made this point that perhaps that's the top for the market. You should have taken a short trade then. That worked. On Monday or last Friday, I think we're making this point when we went to 10,600 that, you buy in this zone now and the market is due for a 100-point rally. I think from that point, the market's given you almost 150, 200-point rally. And perhaps with gap up today, you'll once again take the market close to the high point of the range. Now, the issue here is how do you play markets like this? I think, if you slipped 8 times from 10,900 to 950, could this be the 9th occasion that you go there and you slip? So what you do is you buy as close as you can to 10,600 and hope that triggers would come later. When that happens, in this case, if you were to buy today, there's a good chance that this perhaps might be the final breakout and the market might keep going up. But then you're taking a risk. If you had bought at 10,600, whether this time also the breakout fails or not, you would have still made a lot of money. Now, again, you'll have to either wait for a reaction back to 10,600 or you'll have to hope that this really is the real thing and this time it's breaking out. Once that confirmation is in, then perhaps you want to buy for that momentum trade. But the big trade perhaps was at lower levels. However, one point, the Bank Nifty has broken out. And that is clearly, the Bank Nifty's current level is 100 points higher than the Nifty's last level. In fact, when the Nifty was last time at 10,900, you're already 100 points higher than that on Bank Nifty. And with today's gap up, there could be about 400, 500 point cushion on the Bank Nifty. So this has a shot at new high in January, the Bank Nifty that is. And one of the few occasions where the consensus is getting it right. What's been the consensus? ICICI Bank is the leader.
Yes, what a run yesterday.
And it's just, sometimes you wonder if everyone's top pick is ICICI Bank, could it be, could it continue to do well? And that's what it's done. HDFC Bank and Kotak are sulking a bit, but let's see if they can also find their mojos. But ICICI Bank clearly leading it. Now everything is looking so good today, so you just want to put some risk factors on board as well. Brent crude, rupee, the combination, the markets sort of ignored that. And there's massive, this put writing like gay abandon at 27,200 to 27,400 for this expiry, for this week's expiry. So already some kind of belief that that's the already floor for the bank nifty. Sometimes when that happens at higher level, there's a risk of profit taking, especially with those who would have bought it in the dip. So that would be the risk. But there's absolutely no doubt that the bank nifty clearly is the outperforming one.
Okay. But we should distinguish that the Bank Nifty is a private bank index. There aren't too many of public sector banks. So the positivity is working only for that segment, the private banks, maybe a little bit for SBI and BOB. But even that today with the ILNFS news, it could be negative.
Yes.
The yield market itself may not be very positive for NBFCs.
We'll watch out. And in fact, we'll recap that story that Ritu broke yesterday. Why it might be a bit of a painful quarter for lenders who have big exposure to ILNFS. That's coming up in just a moment. But right now, let's kick things off with what our wise experts have to say as we get set for trade this morning. Dan Feynman of Credit Suisse says that they're forecasting uneven returns for 2019. Credit Suisse is expecting a catch-up rally in the first half of this year, but they see risks for the second half. Various valuation metrics and tactical indicators are in territory historically associated with positive 6-month returns. They believe that a more robust stimulus from China, a weaker dollar, and a bottoming of the technology sector can act as catalysts for the first half. Credit Suisse is overweight Korea, Singapore, and Taiwan. They're still underweight India, Indonesia, Malaysia, Philippines. They remain market weight on China and on Thailand.
Also important to note, Dan Feynman, I think, is the new guy in place of Sakti Siva. So that's, that's a voice that has often got it right, Sakti Siva. And this is the person who has taken her position after her retirement. Let's get you some money market views as well. Pramit Brahmabat of Veracity expects rupee to trade under pressure on the back of a stronger dollar. He expects trading range for the spot USD INR to be between 70 to 70.50.
On the bond market action then, Dhaval Dalal of Edelweiss expects bond prices to stabilize around the current level as market participants await the announcement on expected farm package and its impact on the fisc. He expects the 10-year benchmark bond yield to trade in a band of 740 to 750 in the near term.